Asia Tech Podcast with Graham Brown and Michael Waits.
Hi, this is Michael Waits from Asia Tech Podcast Stories. I'm here with Angela Mackay. Angela is the managing director and the publisher, Asia Pacific, for the Financial Times, and also a board member. You must be extremely busy. We talked about that before.
I'm relatively busy, but hey, I'm a very good organizer of my time, so there's always plenty of time to do a little bit of internet shopping while I'm on all those long conference calls.
I liked what you said to me the last time we spoke. You said, I'm very good at signing things.
That's partly what it is. You've got to be, your wrist and hand should be insured for a vast amount of cash, because that's really my primary importance, I think. Anybody can do my job, but not everybody can do my signature.
Yeah, and I really like somebody. I have a lot of respect for somebody who's willing to say my job is really just signing things. It leads me to believe that actually what they're really doing is getting a whole bunch of stuff done. I'm actually pretty wary of people who tell me I get stuff done all day. I really believe that those people are probably just signing things all day, to be fair.
Beautifully. Signing things beautifully, I'm
Very
sure.
beautifully. Well-trained signing. How are you?
I'm very, very well. It's coming into the start of Q4, and we have a calendar year at the FT. So like everybody else, we're really focusing on how we can maximize revenues and profit in the last quarter of the year, just to make sure that we can reinforce all our bonuses come next year.
Yeah, it's an interesting time, right? So we're in the middle of September, almost at the beginning of October, right? And this kind of reminds me of back when I was in the financial world. It was kind of the same thing, right? We have budgets. We're kind of getting close to the end of the third quarter, and, whether we're close or not so close to the budgets, the fourth quarter is really push time, right? Where it's really time to say, is the business doing what we expected it to do this year? If it is, let's accelerate that. And if it's not, what do we even need to do just in the last quarter to change it and make it better, right?
Yeah, and that's I suppose the beauty of quarterly forecasting, because you can revisit the numbers 3 times a year to tweak and adjust and hopefully raise, but often it's kind of a panic stations. But all the best laid plans can, of course, fall apart. But for the FT, it's been a pretty good year with climbing subscriptions, because, as you probably know, we've got a goal to reach 1 million paid-for subscriptions by 2020.
That's a really big number, actually. This is
it's a huge number. It's more, well, right at the moment, we've got about 826,000, and that's the most paying subscribers the FT has ever had in its 128-year history. So for us, digital has been fantastically challenging, but it's an enabler. It hasn't desiccated and decimated our business. It's actually given us the opportunity to reach a whole new audience right around the world and increase our subscription rates and levels.
Right. So this is the part of the media business to me that's really exciting, and we kind of touched on this earlier. A month or so ago, and that is in the old days, right? Even a print business, but even a digital media business was always kind of a local or regional business, right?
Yeah. That's right, and had local characteristics.
Right, but that meant that, and the FT's actually had always done a good job, right? I think I told you this. I was reading it when I was in college, and that was almost 30 years ago, and it wasn't digital, it was
love
print,
subscribers.
Right?
I love long-term subscribers particularly, so thank you, Michael.
You're very welcome. Your children will thank me as well, I'm sure.
You've already put them through school.
I still have my children to go. But the point is that it's always kind of been a global business with a global outlook, right? And that's been great. But from a subscription level, the regionality of it or the locality of it always meant that it was slightly limited, not just your business, but the media business in general. But, you heard a lot of sturm and drang really at the beginning of the digital media revolution of, oh God, now what are we going to do? Everything needs to be free. No one's going to pay for this. And yet I believe what you believe, and that is that this subscription model, particularly for high-quality content, is always going to exist and actually accelerates, because in an era where telling the difference between truth and fiction is really hard, subscribing to something where you believe has like a really strong reputation for just telling the truth in a way that's as unbiased as possible, I think sort of plays to your strengths, no?
Yeah, it does. And in this era of so-called fake news, I think that a lot of people do want to cut through all the crap, basically. Excuse my
I agree.
word, but cut through the crap, because they've got no time. Everyone's time is being claimed by so many different websites, television, the office, webinars. It's just an incredible cacophony of noise that comes at you every day. So if you can isolate a few sources where you think, okay, I'm going to go to that every day because I think it's a really good yardstick by which to measure my crazy life by, and also it also helps me with my business. So for us, the FT has always been a business tool, and I think you expect to pay for a business tool that provides value for you day by day. So I think for us, it's been a lot easier than, say, general interest newspapers to be able to make that transition to a digital product, and then also to be able to put up a subscription model. And of course, in many jurisdictions, the FT is also tax deductible. So there's a lot of things working for us, as well as being a clarion, I think, for true, reliable and analyzable, that's not even a word, but I'm going to throw it in there, information. So it helps people day to day make decisions about their business.
Do you feel like being in Asia, it gives you a little bit more leeway on the types of sort of creative, when I say creative, I just mean the types of digital distribution you can do, the types of creative risk you can take, for new mechanisms for distribution, right? Whether that's video, podcasting, new types of distribution. Do you feel like you have more leeway, or is it something that just comes down from the top and the firm itself is actually open enough and, views this as a big opportunity enough that you can do some of that experimentation? Yeah,
in fact, the FT has been pretty relaxed about that. As long as we've got very, very strong and potent protection of the brand in action everywhere. So the most important thing is the brand, because that's the value and that's what people trust. Everything else comes underneath it. So as long as we're protecting our brand 100%, then experimentation is encouraged, because I know people, there's the whole fad about it's good to fail because you learn from your mistakes. It's never good to fail. Failing is horrible because you wasted time and all sorts of other things. But sometimes it does lead you to make new decisions that are going to work better for you. Most of our decision making around tech and distribution comes out of head office in London. However, we've got big hubs in New York and Hong Kong, and we're also empowered to get on with some experimentation. So for us, the whole podcast world, video, a lot richer, deeper, longer video. Now it's quite common for the FT to do work that is around 15 to 20 minutes long, and that's without ads during it. So it's almost like a little mini TV program.
It is.
So, and that kind of engagement is very important for us, because for the FT, it is all about engagement, because the more engaged your audience is, the more likely they are to renew if they're an individual subscriber. And of course, the more money you can charge if they are B2B, a corporate licensee, because we have to be incredibly transparent with our corporate customers. So if you're company X and you have 200 seats globally, 200 logins globally for FT.com, then it's not going to automatically renew unless they have seen the efficacy, the use of that information, and how many people are logging in, using the information, how many stories they read a day, a week, a month, how long they spend on the site. So we have to be able to provide all those metrics so that we'll be not only able to convince company X that they should renew, but we say, actually, you're spending a lot more time on there than you originally said you would, so we're going to have an uplift of about 15% in that annual corporate license fee. So doing the homework, getting the distribution right, getting your metrics straight, just helps you make a lot of money. And of course, data, like so many businesses these days, data is at the core of lots of stuff that we do.
Right, and I've got a lot of questions about that, actually, that I'll get to later. But this B2B business is something that I hadn't considered as an FT service. Can you give me a little bit more background on how that works? I mean, I know how the B2C business works, right? I'm an individual. I buy the subscription. I read the publication. But how about for B2B? What other services do they get?
Well, there's not just reading it. There's lots of analytical and statistical product that you can buy with it. The idea is that we try to do global licenses, but sometimes it doesn't work that way, and so you've got to do it region by region. But so I'm sure I can pick any name out of a hat. You've got let me think of a nice. Well, lots of central banks, let's say the Bank of England, have got a corporate license. So that the use of that is that we can also see what they like to read. So, for example, if you're seeing that what's occupying everybody's time at the moment is thinking about, well, what will the next big crash be? Is there going to be an issue around debt again very shortly? You're starting to see a spike in that kind of download or reading of that sort of information. We know that there might be a way to push that kind of information in that direction, and we might be able to create feeds around it or newsletters around it so that we can really speak to the things that are occupying our readers' minds. And that, of course, is really important. We didn't have this business 10 years ago. This is a business that's gone from nothing to really somewhere under the leadership of Casper de Bono, who runs all our B2B business globally. And he's got a fantastically active team, and they're almost like scientists. They're almost like data scientists, the way they approach it with great rigor and discipline. And that's turned into a business that's now worth tens of millions of pounds for the FT from a standing start just a decade ago.
Right. I mean, and that was really the question I was going to ask you is, you have all the resources, right? You do all the research, you look at companies, but you also look at both the macroeconomy, locally, regionally, and globally.
Yep.
And then, and also on a country by country basis. It seems like there's a big business, and you've been doing it for 100 years. I mean, I don't know how long it's been, but all the accumulated data you have must be sellable from an analytics standpoint, not just to sovereigns and to central banks, but also to hedge fund. Anybody that wants that data should be really interested in paying for that, I would think.
Yeah, and actually, Michael, you've quite perspicaciously picked on a business that we are really looking at very closely, particularly with our new owners, the Nikkei, which is the biggest media group in Japan. Right. So they bought us just about 18 months ago, almost 2 years now. And of course, with their firepower in Japan and our reach globally, we've been able to work together to think about a whole lot of different businesses that we'll be able to pull together, that we'll be able to present to a broader client base. And one of them is pooling this enormous, deep well of information and data to provide a fantastically useful database for investors across lots of different sectors, but particularly around investors looking to Asia and unlisted companies, because as you well know, the number of privately owned companies in Asia is still way out of whack with those that are publicly listed. So that's a bit of a mystery, but there's still lots of potential around those companies and around those sectors, but it's opaque. So the more analysis that is available to prospective investors around the world, the more informed their decisions are going to be. So yeah, this is a business that we're looking at very closely at the moment, and that's about all I can say. Yeah,
so again, I don't want any proprietary information, right? But my brain is actually slightly on overdrive right now.
Right.
Can I just go through this? Just have a little bit of patience with me on this, right? So in the old days, you had...
Oh, yes.
Yeah, sorry. But in the old days, you had, an investment, not you, but there was an investment banking business that built a trading business around it to support secondary activities in securities that an investment bank issued. Yep. But then around that business, you had a research business that said, of all the IPOs that we've done, here are the 5, 6 months later that we think are the best, and we think you should double down or get out or whatever it is on those businesses.
Yep.
But that whole financial business has just been turned upside down, and the business that provided research kind of got unbundled and sort of separated out because, in a way, nobody was paying for that research anymore because it seemed conflicted right?
Yes,
But
yes. Well, everyone, I've been a financial journalist for a long time, and
Sure.
before I went to the business side, and front running is as old as apple pie, right?
Yeah, but the thing is, you can't front run a private equity business or what I'll call a venture capital business, but I don't really love that term anymore. But I keep thinking about, and in Asia, like you said, there's a different opportunity than there is in Europe and the United States, right? Because there's a huge private equity, which means private company business, like you said, that's slightly opaque, but still gets covered by the Financial Times. I've got a bunch of questions about this, but is there an advisory business that's Chinese walled, for lack of a better term, because of all the data and all the information and all the research? So you're looking at this kind of from the flip side. You already do all the research when you go out and report on them. You know what I mean? Is there an advisory business on the other side that's separated from the sort of business and research side that says, we know all these things about the private equity business. We can't front run because that doesn't exist. But would you pay for data on private equity as well? So to help investors in those businesses too. And then I want to talk in a bit about venture capital and new media too, because I have some ideas there, but I'm just curious how you think about that. Do you know what I mean?
Yeah.
And we hadn't spoken about it before, so it's, again, if you just want to say, I'll think about it, that's fine. But I just think about differentiated business models all the time, and it seems to me, here's the way I look at it, right? AWS was a business that, and you'll see where this is connected in a second, hopefully, but AWS was a business that Amazon built because they needed to be able to service new businesses internally that they really wanted to just plug and play. In other words, setting up new servers and new services for each individual business that they built didn't scale. And then they realized, if we're doing this anyway, why not build excess capacity, or maybe they just had excess capacity, and then let's sell it to people to use. And then businesses can now scale automatically by using the AWS platform. And I kind of see the FT's information and research and sort of investigative business as kind of like that AWS business for information, if that makes sense. Because I always wondered why, Amazon always knew which startups, or at least had a view onto which startups were going to get bigger because they saw the data usage, right, that they had even before an investor could see it.
Yep.
You're doing all this, and not you personally, but the FT and businesses, otherwise you'd be way too busy. We already talked about that. You have too much to do as it is.
I'm just signing.
I'm not giving you other work to do, by the way. But you have all this infrastructure in place that's already doing all this work, and I wonder how you apply that then in an AWS way. You have the platform, you have the resources, you're doing all the work. Is there another business on top of that? I don't know. I'm just curious what you think.
Well, I'd love to think there was, because as you say, it's just kind of, it's reshuffling the deck chairs, on the deck.
But in reverse, right?
Yeah, exactly. So, but of course we always got to think about the issues of that Chinese wall, which you mentioned, the conflict. And I'd hate people to suddenly not have faith in what they read with us, or what we sell to them, because there's something else in our back pocket. There's an example which has happened quite recently, and it probably even goes further than this, and that's Bloomberg's decision a couple of weeks ago to set up a consultancy business for corporate clients. So I was fascinated by that, because it's clearly a big investment, but like exactly the same way you're speaking, Bloomberg's got this extraordinary raft of data and information that they should be able to curate, that special word of the 21st century, and present in a saleable form, and then they're overlaying that with human analysis, a la a Bain or a McKinsey. So I'm fascinated to see how that's going to work, and what happens when a particular client says, I'm paying you quite a lot of money a year for this particular service, but then you've got your news journalists writing stories about how shitty my annual results are. So, I'm just wondering how all that is going to play out. And if I was smarter, I'd be able to tell you right now. But at the moment, I'm just trying to figure how we can slice and dice that to make it work for us. Yeah,
I just think there are multiple opportunities there. And the reason why it struck me was because, as I said earlier, in the old days, as we got into the early to mid 2000s, nobody was willing to pay for the research that the big investment banks did, but you're already getting paid.
Yes, we are all getting paid.
Right, because that's the subscription model that and it's so interesting to me, right? I watch all these new digital media businesses come up, and they're all based on advertising, which I think is it's a bit of a fool's game, but not really. You need to advertise somewhat, right? But it can't be the only thing. Your content has to be compelling enough. You know, it's like I say, you don't go to a movie theater and just walk in and go, you know, I'll pay you for the popcorn only because the movie is a freemium event for me. It just doesn't work that way. But you know what I mean?
Yeah, I do. I do know what you mean. And of course, you've got to get away from an advertising model if you're in media, because unless you're hugely mass, and you're totally programmatic, you don't have any people, you don't care what ads sit on your site. But for us, of course, as a niche premium product, I mean, our brand is a lot bigger than our business, right? There's only about 3,500 people that work for the FT globally. You compare that to a lot of the people that are in our competitive set, and we're tiny. And then you look at the other people that are in our competitive set that are new over the last 10 years, like the Facebook and the Google, and we're minuscule. So for us, we've got to be super careful about how we seek revenue. And for us, the Holy Grail has always been regular, renewable revenue. And as we saw, particularly, and it's still burned on my soul, the global financial crisis of almost 10 years ago, you see what happened to advertising then. Already you were seeing print go down in favor of online advertising, and that's fine because you can be on both sides of that equation. But the way it just crashed, the way in the space of a week, our revenues fell away, not just us, but everybody else. That was such a chilling moment, because if we had any doubt that the move to subscription was an interesting experiment as opposed to an absolute imperative, that was very clear from that day on. And I was always very surprised when this was not a light bulb moment for so many of our competitors. But for us, it completely reinforced our business model.
Right. And again, I was talking to somebody on the other side of the business, right, on the advertising side of the business earlier. And I don't think, and we were talking about this concept of, is your online life different than your offline life, right? In other words, as it relates to privacy and paying for things and other details like that. But I think, you know, nobody received the Financial Times on their doorstep every morning or on their desk at work for free. Everybody paid for it. And it was never, and there were still advertisements in there, and, you know, they were always super premium advertisers as well. And I remember, I literally do, like when the Washington Post and the New York Times and the FT first went online, and I remember thinking, is this free? You know, because the idea was, well, you don't have a printing press anymore. I mean, you do, but you didn't to produce that. So distribution is frictionless, and then it should be free then. And I thought to myself, sure, but you have web designers and back-end servers, and all that stuff kind of replaces at the same level. In other words, if you're going to distribute this to 1 million people or 10 million people globally, it's going to cost you way more than it would to just have a printing press somewhere outside of London and then distribute it into the city. So I
totally agree.
Right? But it never made any sense to me. So now the rest of the media world is realizing you have to pay for it. It doesn't seem to me to be like a new idea. And that was the conversation I was having with the advertising guy. It's like, you know, whether you give up privacy, we can talk about that too, or anonymity. We've never been anonymous either. So I don't think it changes online, and I don't think your business changes online, except that it gives you a bigger market to address. And what happens then is that, and I'm going to make up a name, right? What happens is that the Hull, Massachusetts Post, which only has 10,000 people in town, that probably goes away. But that's okay, actually, right? Because it gets replaced by people reading the FT.
Yeah, although as a journalist at heart, I hate to see things closing. And I think there is still a place for regional, even local news, because people do need to know. I need to know if that bus line has been turned off, or they're going to build a parking lot on that bit of parkland. But maybe you just need to log into a small community website to get that, you know, so it becomes a much more of and more, when I say community, I mean the community is feeding into that. Maybe it becomes like a Wikipedia type of organization. But What was the beginning of your question there?
Yeah, so
I riffed off on that?
I just think the subscription model, I don't think like you said, it's the light went off in everybody's head. And I think for people like you've already known that. Like that was the way the business was going to make money. That's the annuity into that business because even in an economic downturn, people still need information that they trust. But what they don't need is an advertisement for a Lexus maybe. Do you know what I mean? So that's going to go away. And advertisers get scared, but readers don't get scared. They want more information, not less. And I think we've found that actually over the last year or so. I'd love to know, and I don't want you to answer this, but my guess is that for like really great online subscription businesses, that subscriptions have probably spiked 25% in the last year, 18 months. I don't know what that number is, but I'm sure they've spiked quite a bit just because people are hungry for real information.
And they spike according to events. Correct. So we got a big spike at Brexit, the time of Brexit, because people are going, I don't know what this means for my business. Is it good? Is it bad? How is it going to affect me? So we saw a big spike in subscriptions then. Also around the last US general election, what does a Trump presidency mean for the world? Everyone's still asking that question right now, but it's a mystery and it's the unknown. So how do you face the unknown? You kind of look at history, you look at what's going on in the world today, and you try to draw these threads together and make some kind of calculated, intelligent prediction. So, and that's what people think when they make a decision, I suppose, to subscribe to the FT under those circumstances. And not just us. I'm sure they're looking at The Economist. I'm sure they're looking at the Wall Street Journal. They're looking at the Harvard Business Review. I mean, right. Learn to be more analytical, learn from case studies, learn from the past to try and throw some kind of light on the future. But just to harken back to your point about the cost of journalism and the cost of running a premium website, it's really costly. It costs a lot of money because immersive journalism is very, very, very expensive to produce. You've got to have a lot more video. You've got to have people out in the field. You need to have a lot more interactive graphics. That kind of software is expensive. We try to do a lot of it in-house. We have hundreds of developers working for the FT. So we try to do as much as we can ourselves, but there are times you've really just got to either buy in the talent or buy in external software. So it becomes a constantly hungry monster. It costs a fortune just to maintain the quality, and then to improve and increase what we do, then that costs another bunch of cash on top of what it costs to maintain our existing level of quality. So it's a hungry beast. So you've got to feed it with as much as possible. So we love ads. Don't think that we don't enjoy advertising revenue. I love it. For sure. But it's got to be subsidiary to renewable subscription. And of course, last year we crossed that we had that tipping point. So now we make more money from subscriptions than we do from advertising. Is that unprecedented in the history of the FT, or is that's a normal state? That's unprecedented. That's amazing. Yeah, it is amazing, and it's taken a lot of work by a lot of people. Fair enough. Can we talk a little bit about the newer side of the media, the video, the podcasting? Do you think there's a generational change that's taking place that's going to feature that type of content more as that generation sort of becomes the main audience for the content that you're producing? And if that's true, what do you do to become expert in that new media space? I think it's becoming more prevalent, and not just because younger people are interested in our news. I think it's because our readership, they like gadgets. They like being first movers. They like being early adopters. So we're finding people that have been our subscribers for 30, 40 years just as keen to listen to podcasts or watch video or, download the app so that they can, and then download the FT so they can read it at their leisure on a flight. We're finding that they're receptive right across a whole different age group. So interesting. Yeah, it is interesting. And for us, but what I find even more interesting is that the paper won't die. There's about 200,000 copies of the paper that's printed every day. It's come down from a high of almost 500,000 copies about 10 years ago. But it seems to just sit there. It floats on that 200,000 level. And we wonder why that is. And I think partly it's because there are still people that prefer to look at it first thing in the morning. But it's almost the danger, the crack cocaine of the digital world. It's very hard to figure out where there's a beginning and a middle and an end of anything online.
Correct.
Because it's infinite. So the paper, and this is how our shops have explained it to us, at least when we get the paper, we know that this is what some of the world's best journalists and editors thought was the most important thing for us to read at a given time. And it's got the front page, and it's all the stuff that we know where to find in the middle, and then we go to the end, and then so that kind of kicks off my day. So, and then they go to the online version for the rest of the day for updates, and then they because we send them off to various other parts of the web as well, to further the information. So I think that that's an interesting thing, and of course in some markets we're still a status symbol. So people like to walk around with it underneath their arm. I found to my absolute, well, it was kind of nice, but it was also a bit like, oh God, I wonder if they asked anybody, a very, very, very expensive Italian menswear brand. I was walking by his shop in Queens Road Central, and saw, every single one of the male models wearing their $2,000-3,000 US suits has got an FT under their arm or poking out of their pocket.
Is that okay?
Or sticking. Well,
it isn't, right? I mean, that's great in a way.
It isn't. They should have asked.
Right.
But then I thought on the bright side, and I thought, I bet you they had to buy about, 1,000 copies of the newspaper to put them into all their shop windows. So as long as they weren't messing with the content, it was just sitting there. I kind of didn't mind. But, that's the other side of it. Why shut something that doesn't need shutting? So we nurture the newspaper. We made sure that we've got to a level whereby it's self-sustaining without advertising. So it breaks even and makes money before any of the ads are included in it. So the newspaper is a healthy, thriving, pink and glowing creature that we're proud to have. And of course, what's our single biggest, most potent marketing tool globally? I think it's the pink paper.
Yeah, and I agree with you. I think it's a status symbol, right? To a certain extent, I'd love to have an Apple Watch, but there's no status associated with it in the same way that there is wearing a Breitling mechanical watch.
Yes. Yeah, you've been in Asia far too long, Michael, if I might like to. The first thing you do in a business meeting is look at what someone's watch is.
Is that the case?
Of course, and calculate, that's a very interesting one in the series. That's limited edition. So, that kind of thing, that kind of status symbol value shouldn't be underrated, I think, for the FT. And as I said, it markets our product around the world, and people then know what an FT Live event is about. The FT, that's that newspaper. Let's buy FT.com. That newspaper is something that I'm familiar with and I know is a quality item. So yeah, it's really, really useful to us on lots of different levels.
Angela, I feel like you're reading off my notes.
Oh, really?
I really do.
Maybe I'm just
because I feel
like.
No, because I feel like there's like a camera shining down on the little notepad that I have next. Because the next thing I wanted to talk to you about was FT Live. Right? Because this is, can you explain what it is? And then I've got a bunch of other follow-up questions about it. But just for the listeners that don't necessarily know what FT Live is, I have a few questions after you explain it. So please. Okay.
FT Live is what it says. It's the FT coming alive in our conferences and events division. So we did we staged about 195 events globally.
Almost 200 events last year, yeah?
Yeah, that's right. And it's not far off that this year as well. But we've switched the mix a bit so that we do fewer client-tailored events, and more big pillar events, that follow the news agenda and, involve many of our journalists who work with us to get the agenda together, think about who the best speakers would be in that given sector, and of course then they in turn turn up to the event, and they provide the backbone of our chairmanship and also our moderation. So it is the FT coming alive around certain subject matter, and it also gives people a chance to meet their peers. And of course, as we become more virtual in the way we operate our businesses, being able to eyeball someone from your tribe is a really valuable thing, to know that you can come together once or twice a year for this particular event. They know they're going to meet their mates, meet their competitors, meet their customers, and that's a very valuable experience. And of course, in a 5-star quality FT environment, so you're safe, but you are stimulated at the same time.
Right. So, and are these arranged around specific verticals? Right. Like, is there a tech event, a finance event, or is it just current events, things that have happened recently, or a combination?
No. Well, it's a combination of the two. So, as there's industry changes, we will then start to focus on that. So, for example, 3 years ago we didn't have a cybersecurity conference, but now we have cybersecurity conferences in the US, the UK, and Europe, and we're planning one for Asia.
Nice.
So we didn't think about AI, but now we're running a whole raft of events around humans and machine learning, and trying to figure out how this is all going to be complementary one for the other. Are we afraid, as Elon Musk says we might be, or do we figure out how to get the best out of it and apply it to our business? And of course, then that leads to a whole lot of conversation around the future of work. Do you have a job? And if you have a job, how are you going to do it? How are you going to accomplish those tasks? And then you think about the future of manufacturing if you've got all these changes in technology. So one thing kind of leads to the other, and it's intriguing because these sorts of events always open up a whole new lot of ideas for us to think about a little bit later down the track, and deepen those kind of that kind of subject matter, and go in. Of course, then you take them into different markets. We're doing more work in South America, more work in Africa, private equity in Africa, sustainable investing in emerging markets, including Africa and South America. It's as long as your arm.
Right.
Health, of course, is another. Digital health. How's that going to affect our lives and our lives personally, but also our investment world and how we allocate our funds. So it's as long as a piece of string, really. It's and it's just as fascinating.
And that's really the end of the question.
String theory.
Yeah. So string theory, exactly. But that's kind of the end of the question. That is, after doing all these events, doing all this research, running a big online and offline publication, right? You just have all this information, and I kind of talked about it earlier about, building a business that's advisory around it. But even more than that, you see so many different things, right? And I kind of want to make what I'll call the Netflix analogy, right?
Yeah.
So Disney, 6 years ago, and all the other sort of media companies sees Netflix and says, we'll allow them to be a channel for distribution for our business because they get this tech thing. We don't care about it. No one's going to download a movie. It doesn't really matter, but it's a good way to test it. They wake up one day, they've invested no money in a Netflix business, and Netflix is now has a market cap of $80 billion.
Mm-hmm. Yep.
So because it's interesting to me that you, now with the Nikkei as an investor or a partner in the FT business, which is a great thing, right? That's going to happen. And that's a beautiful thing because you're going to both have different core competencies. The Japanese business is going to get run differently than the FT business, and that's good, not bad, I think. But are you, as a team, are you actively looking for that new business that could be the Netflix of publishing to create another $80 billion of value in that same sense? Are you actively doing that as well with all this information that you have?
Yep. Yeah, well, I alluded to it earlier. We are looking at a new business, a joint venture with our Nikkei partners, and around how we can work our data and information much harder.
Right.
So yeah, we are looking at that. I don't know if it's a Netflix moment, but it's our first foray into something that is, a pure data an analytical business, but going into for those clients that you already mentioned.
Right.
VC, as you say, private equity, everything's private equity these days.
Right.
But looking into that just global investment world, doesn't matter what kind of investor you are, you need information. So we're not going to pick and choose between the categories, but we just want to be out there and available at an excellent premium price for people who want to know more about the places that they'd like to allocate their cash.
Yeah, no, I mean, obviously I think it's a great idea, right? And that's why I brought this up. And kind of, if you look at the flow of my notes, it's kind of all led into, I like the event business as well, because I think the event business creates what I'll call a virtuous circle from that information that you have. Events, people come there, you get more information, but then you understand more by creating that network what the sort of implications are of all that information, and to turn that into, because see, for me as a new media business, right, I don't have the same restrictions on conflict of interest, and but I still hold myself to a standard, right?
Of course.
I definitely do, and you'll see this over time, right? In other words, I have a ton of information, and I've led my entire life like this, most of which I won't share because it's the wrong thing to do, just from an integrity standpoint.
Yep.
But for the things that are shareable, and the things that I can make the case that it was okay to do that, I can also, right, one of the reasons why I do what I do is to get information to build an investment business around, right? That's one thing we haven't spoken about, but I am an angel investor and a private investor as well. And by talking to people and creating a network, I create a virtuous circle around what is the next big thing. How can I learn about it, right? How can I go to an event like an FT event that's on health tech or med tech or artificial intelligence or augmented reality, learn about that, and then invest in that and create that virtuous circle of investment. And I really don't see any reason why you guys can't do the same thing with all, because it's in my notes, like with all of the resources and all of the information that you have. It just sounds like in today's world, that's just another possibility. So the fact that you're doing that in a way, right, in the right way, with the Nikkei as your back-end resource is actually a great thing, I think.
I hope so. Fingers crossed that it all works out, and I'm sure we'll be talking a lot more about it in a few months when we've got a lot more of our marketing material and the back end stuff, because you can imagine that is pretty
non-trivial,
sophisticated. Yeah,
yeah, super non-trivial. But that's the part about it that I like a lot. Right? In other words. We joked again, and we'll probably joke for the entire time that we know each other about, signing documents. But one of the great things about the position that you're in is your ability to learn about all the new things that are going on in the world, right? So you get to literally go home at night and think, I can't believe I just was exposed to that thing that's so new and so interesting. And now I get to figure out how I apply that, again, not just to my local business and my regional business, but I sit on the board too. So what does that mean globally? And that to me is fascinating.
Yeah, and of course that means that you're always learning. Frankly, I mean, that's one of the reasons why I don't know why or how I'd ever retire from the workforce, because there's just so much going on. And of course, it's not as if we're ever going to get to the end of it anymore. It's not like there's a digital. There's not a transition. It's the future is here, and constant. It's never going to stop. It's just constantly bombarding us. And as I said, sort of coming back around to the beginning, any tools that you can use that help you make sense out of the noise is worth paying for. Yeah,
agreed. So I'll end with this, right? I have so many more things I want to talk to you about, but hopefully we'll get together again soon and we can talk about more things, right? But
sure.
I'll end with this. One of the sort of proprietary traders at Goldman Sachs once said to me, he came out of an engineering background, and he said to me this. He goes, an engineer's job is to eliminate noise and look for signals. And if you can look for a signal, but that's his job, right? It sounds trite, but that's what they do, right? They have this wire, and on that wire there's all this information, most of which is useless, and they look for signals. And when you find those signals, whether it's a trading signal or a business signal, as you said, your job as the FT as a source of information is to eliminate the noise and create signals for people. And I like the fact that you've actually said that. That's interesting to me.
Yeah, it's the purpose. It's our purpose, right? We have to be fit for purpose. Yeah.
Agreed. Well, I feel like I could keep going. Look, I don't want to take up any more of your time. I really appreciate you doing this again, and hopefully you'll come back with us and do more.
I hope so. I mean, I've really enjoyed it. It does make me... I've taken notes from my own conversation.
That is awesome. That is awesome.
Thank you so much, Michael. I really appreciate a conversation. You've been listening to Asia Tech Podcast. Find out more at www.asiatechpodcast.com.